Hi, I'm Peter Rose, founder of Longwood Currency Trading. When in doubt, sit on your hands. You know, Jesse Livermore said that. He said the greatest amount of money that he made was as a result of sitting on his hands, not trying to create a trade or not trying to trade when there was no opportunity there. This is mid-December of 2023. We're in the middle of the end of the year, flushing out of a lot of the financial markets and last reports for the year and all that stuff. So there's turmoil in all of the markets, and that's particularly true also of the currency market. Not only do we have periods of high volatility and uncertainty, but we also have long periods where nothing happens. And when you run into that, it's really hard to, I mean, if you have a system, you're going to trade that, and when the characteristics change, then you lose all your money. But when you're a trader and you understand trading, there's a time when that environment says, just let it go, let it be. Today is a Friday, for example. I won't be publishing this until the following Thursday. But when I got up this morning, the market was relatively calm and hadn't really done anything in the overnight session. It was moving a little bit. I had an open position, and as it began to move in my favor, I said, well, I'll put some more limit orders in and see if I can capture a little bit of that movement. And it started to move, and I thought, well, I'll move those limit orders around a little bit, and I'll extend my stop, because I think when this thing lets go, there'll be an explosion. And certainly there was. I think I made something like $2,500 or something like that in about 20 minutes, because it took time for the momentum to go, and then it went, and it just teased me for a long time. It was 3 pips off my target, but I just wasn't going to get out, and finally it took it out. Actually, it's more than 2,500. I think I made 3,500 on that trade. And then the market, it hit my take profit point. It went a little bit further than that. Then it retraced. It came back down to that point, and it retraced some more, and finally it came back up to basically where I had started entering my lots in. So by being out and capturing around $3,500, I would have been break even or negative $1,000 or something like that if I had just hung on to that, or I had not put my take profits, stop, limit order in the right place. 2 principles. One is to trade for reasonable objectives, meaning you need to identify momentum as to the probability that price will get to where you need it to get to. And you also have to gauge the overall market for what is the market going to do. The other day I did a video, don't trade on the news, be aware of it. And that's what I was today. I was aware of the news and the potential for the effect that the news would have based on a fairly flatline price action since the day before, since Thursday, late afternoon all the way through until, around 8 o'clock or 8:30 on Friday today, where things started to unravel, and I went in and got $3,500. And then, as I said, the market stopped moving. Now, I could have gone in and tried to catch the rebound on that or whatever, but I decided that I was not going to do that. That the market uncertainty dictated that that was a time to sit on my hands. And so I did. I had some emails from some folks that I'm communicating with, and so I was doing some of those. I think I have about 5 folks I'm talking to right now that are actively engaged in trying to figure out what they want to do with their trading. And so I had plenty to keep me busy. But the trading platform was open on the side, and I was also catching up on general news and looking at the DAX, because I'm trading a USD pair. Not the DAX, excuse me, the DXY, the Dixie dollar index. As we got on in the early afternoon, however, the market characteristics began to change, and I closed all my extraneous windows and just had my trading platform open and saw another potential for a move. I thought about that. I went in and it just wasn't right. I lost about $600. Okay. And it went against me. I would have lost a lot more. When price came back, I went in again and it went in my favor, and then it started to come back, and I thought, you know what, I'm just going to get out. I lost another couple of $100. Price didn't go too far. It looked like it was trading sort of in a range, but a small range on a small time frame chart. So what does that mean? It has something to do with order flow. I'm going to watch this. And as time progressed, about 45 minutes later, I saw some activity that I became very interested in. So I took another feeler trade. I dropped about 3 lots in. Started to move in my favor, came back against me. That's okay, I didn't go too far. Going ahead. I think this is going to move because I don't need it to go a very short, a long distance. I didn't have my stop was in an area that was close to the take point, so I wasn't going to be able to stage lots in. But I'm 3 in there right now. So finally it moves back to my take point, and it starts to move well. So I get about 3 pips in, I drop another 3 in. I go 2 pips more, and I'm beyond my average. I've got 2 pip gain, 3 pip gain, I think. I dropped 3 more in. Actually, I think I dropped 6 more in. Whatever it was. And price is really starting to rip. I thought, and it's getting very close to my take profit point, which would have been probably $1,500 or $1,800, something like that. And I thought, you know, this has some juice to it. I think I'll move that profit target to my next place of interest for order flow. I pulled it down there, and it wasn't but 2 minutes later that the whole thing hit, and I ended up today just short of $6,700 gain. That's pretty good, but I took a $1,300, almost $1,400 hit yesterday, probing the market, and I got it wrong. That's what happens when you're trading. I mean, I'm aware of the news, the economic conditions, and what December represents to the investing and trading and economic community. So you have to be very, very careful. And so most of December so far, and again I'm halfway through, I have sat on my hands. I've only traded 5 out of the 15 days or so that are available in the month. And I'm about, I think 6 or 8%, 7% up on my risk, my overall risk that I've taken. So I've been sitting on my hands and waiting for sort of the bag to split open and the money to start falling out. That sounds cliche-ish and cheap and egotistical, but that's really what sitting on your hands means that you're supposed to do. You need to not trade, and you have to be very careful about watching the screen so you don't create anticipatory trades and then do what happened to me yesterday, which was I got bumped out. I lost $600. I got bumped again for a couple of $100. I mean, that stuff can pick away at you, not only eat away at your ego, but also away at the money that it's been very difficult for you to accumulate. I mean, say $800, $900 loss, picking away at the market, trying to look for the opportunity, that's a lot of money. You know, you have to have a fairly good win-loss ratio in order to have confidence that you'll be able to make that up. You certainly can't make it up the way that I did today by a $6,700 day on an average of about 13 lots, I guess. I think that you are then looking to get more pips in order to get more money. And you really can't do that. I was fortunate today in judging the momentum not the velocity. I have a different term. I look at different things. My rules are based on momentum and not volatility. To be able to see a couple of opportunities, a couple of holes in the clouds to let the sun come through, I guess, and was ready to enter those trades, because my trading rules clearly lay out what I need to do in the event of a short stop and getting maximum number of lots in up front as soon as you can, so that the average value is far away from the profit target, so you make more money, right? In any event, the key to today's success, and I could lose $6,000 Monday. I'm just telling you as we go what I'm doing, and I've taken some horrendous hits this year. At the beginning of the year, I took a six-figure hit, and I haven't made up for that yet. I almost did. I was $90,000 up at one point, and then but I trade for a different reason. I'm trading to really go for it. So I took a huge position, and I got the timing on it wrong, and so most of that 90,000 that I was up evaporated. But I was no worse off for the 3 months. It took me 3.5 months to make that 90,000, and so I lose most of that. But I'm no worse off than I was 3.5 months ago. I'm still a little ahead for the year, and I'm still ready to fight, because the day after I took that loss, I was in there and I made $1,400. So you can't let big losses deter you, and you can't make big wins make you think that you hold everything godlike and you're going to get everything right. Because when you get it wrong and you think that way, you get a flush out. So it's important in your trading that you understand when to sit on your hands. When to sit on your hands is part of learning to trade. If you guys are out there learning someone's engulfing candle pattern system, or a system that uses RSI or fib analysis or Bollinger Bands or news releases London Open, you're not going to be ultimately successful, because the systems, as I just put a video out, systems work until they don't. Go back and look at that video and see what I have to say about that. When you know how to trade, then you know when to sit on your hands. But if you're trading by systems, you don't think about that. You're only looking for the system trigger. And guess what? You'll find it. You'll find that trigger. Now, a system it can show you what to do and how to do it, but it doesn't indicate when you do that. That's the important component that I try to share with the folks that want to train with me, because nobody else teaches that. Why do I know that? Because 90% of the traders lose 90% of their money in 90 days. That's the statistic, the 90-90-90 club. And I was part of that when I first got into currency trading with a large account. I was in there with $45,000 account, and it took me 4 to 6 months, and I lost $40,000 of that. And I backed up from it using my 33 years career as a software engineer and degree in physics and all that other crap that you know about me. I figured out what not to do. That's what Jesse Livermore said. Figure out what not to do, and then you'll know what to do. I took my remaining $5,000 and doubled that, and just about doubled it. I was like $200 close from doubling it in 4.5 months, I think. And then I added another 10 grand to the account, and I've gone on from there. Trading a system is not going to give you that flexibility to sit on your hands. If you don't understand win-to-loss equation, then you don't understand what your probabilities are for making up the losses that you'll have in probing the market and looking for the big opportunity that comes maybe 5% or 10% of the time. Sure, I had a big opportunity today. You make $6,800. I've made more than that in a day. I made $24,000 in a day last year, I think it was. So The 24,000, that's a pretty good movement for the size that I was trading. Making a couple of $1,000s or $3,000 on a 13 lot. I mean, you do the math on that. You don't need a whole lot of pips in order to do that. So it's not exactly like that 5% of huge trades that you make. You have to base the huge trade on the size of the bank that you're putting at risk. If you're going to make an 8%, 5 to 8% return on your money as a day trader in a day, or maybe I'll carry for 2 or 3 days, that is one of those 5% trades where that's where you make a lot of money. And then you can't just get crazy and go in and try to make that 5% against that risk again right away, because statistically you're not going to be able to do that regardless of your skill, because you will be so enraptured in things that you won't sit on your hands when you're supposed to. And I think that's what a trading coach can help you with, or a mentor, that no amount of telling you about stuff and whatever, or an online course that just here's what you need to know, and here's the London Open and good luck to you. I don't believe in that. I don't think it works for you. Oh, it works for you if you wanted to pay your light bill for the year. Any dumbass can have a relatively small amount and pay their light bill for the year. But I'm not working with people that want to pay their light bill. I'm working with folks that seriously want to trade and either replace their job income or at least seriously add to that income. And you're making $80,000 a year. You need a pretty large bank in order to replace that income. You know, you'll need, instead of buying a house, you'll need the down payment for that house in your trading account in order to make an $80,000 net profit for the year. You just want to trade your for a light bill. You can do that on a $10,000 account. You know, a couple of $1,000 a year. But I'm not working with folks that are only interested in that because they won't understand trading. I constantly get this blowback from people who write me and want me to work with them, and how much does it cost, or what do you do, blah, 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 blah. That's what everybody else does. I don't do that. I want to know who you are, where you're coming from, or what your goals are, what your objectives are. And if it isn't to replace your job income, I can't help you, because the stuff that I talk about isn't applicable to you. You won't be able to do it. But if you go and watch somebody else's video and they tell you to trade cross pairs at 200 to 1 and set it and forget it and do a Bollinger Band, good luck to you. You may very well take that $500 and run that to 3,000. You may take the 3,000 and run it to 6. But as soon as you get to 6 or 8 or 10 and you try to do that again, you don't have the skills. You don't know how to trade. All you're doing is following the numbers. It's like the paint by number thing. You know, in any block that's listed as 14, paint that red. In any block that's listed at 12, paint that a kind of a hue of pastels color. But you're not an artist. You're just connecting the dots. And that's what you're doing in following a system. Even if it's your own system that you develop, which is probably not worth shit, because who are you to invent a new system? There's already been people far smarter than you and who have been doing this stuff far longer than you that have already come up with that system and either discarded it or found a way with other things to make it successful. But it isn't the system that makes you successful. It's your ability to trade. And part of the critical aspects of learning how to trade is that part of that is when not to trade. Sit on your hands, right? Okay. The American singer Kenny Rogers, I Know When to Hold 'Em and Know When to Fold 'Em, that song that he sang in a movie that he was in. Know when to hold 'em and know when to fold 'em. Know when to sit on your hands and know when to push all your chips to the center of the table. Those are two things that you'll learn in trading that you won't learn from anybody else. They'll just teach you systems. So be very careful as you look at the at price action, that if there's no trade there, don't create one. Step back from the boards, have a cup of coffee, go out like I do sometimes, haul in a couple of cartloads of wood for the wood stove. Get away from the trading platform, because it's singing to you. It's calling to you. Make a trade, make a trade, make a trade. As soon as you do that, boom, you're gone. And then you're going to want to make up for that. You're going to revenge trade. Look, that gets into the psychology of it. I know you don't want to hear about psychology. If you do, send me an email. We can chat about that. But for now, if you're unsure of what's going on in the market, you got to know when to sit on your hands. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.